Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines: the Philippine banking sector's total assets and profits grow in the third quarter. Bitcoin rises to a fresh record high as Republicans near full control of Congress. With pro-crypto leadership in the U.S., what's next for this digital asset? We'll talk about this and more with the CEO of Coins.ph, Wei Zhao. OPEC cuts its forecast for global oil demand, citing weakness in China. And U.S. Secretary General Antonio Gutierrez is urging world leaders to pay up and increase climate financing to prevent a humanitarian disaster. The banking sector sees strong earnings in the first 9 months of the year, thanks to growth in loans, deposits, and assets. The sector's combined net profit rose 6.4% year-on-year to 290 billion pesos, while net interest income increases 14% to 767 billion pesos. However, losses on financial assets surged 349% to 76 billion pesos. The Bangko Sentral ng Pilipinas insists that the sector remains resilient, accounting for 83.4% of the resources in the financial system. Now, telco giant PLDT is on track to meet its 2024 core income target of 35 billion pesos. That's amid steady growth in its data and broadband segments. In the 9 months through September, PLDT's core income rose 2% to 26.6 billion pesos. But despite the positive trajectory, the company's chairman and president, Manny Pangilinan, says that he isn't entirely happy with their revenue growth due to pressure from legacy services. He says PLDT has to do better next year with a forward-thinking approach. Now, OPEC cuts its forecast for global oil demand growth this year and next. The producer group predicts oil demand will rise by 1.82 million barrels per day in 2024, down from its previous estimate of 1.93 million barrels per day last month. As for 2025, OPEC's projection was reduced to 1.54 million barrels per day from 1.64 million. China accounted for the bulk of that downgrade, as OPEC says diesel use in that country has been under pressure from a slowdown in construction amid weak manufacturing activity. Now, the world is on a final countdown to limit global warming, and time is not on our side. That warning coming from UN Secretary General Antonio Gutierrez during the COP29 summit in Baku, Azerbaijan. In a speech, Gutierrez tells world leaders to pay up to prevent climate-led humanitarian disasters.
In our global economy, supply chain shocks raise costs everywhere. Decimated harvests push up food prices everywhere. Destroyed homes increase insurance premiums everywhere. And this is a story of avoidable injustice. The rich cause the problem, the poor pay the highest price. So doubling down on fossil fuels is absurd. The clean energy revolution is here. No group, no business, and no government can stop it. But you can and must ensure it is fair and fast enough to limit global temperature rise to 1.5 degrees Celsius.
Nearly 200 countries are attending the annual UN Climate Summit this year. Their focus now is to raise hundreds of billions of dollars to fund a global transition to cleaner energy sources. Gutierrez says he's confident a deal will be reached. Meanwhile, oil and gas giant Shell wins an appeal against a landmark climate ruling in the Netherlands. Now, the case stems from a 2021 court order for the company to cut greenhouse gas emissions by 45% by 2030. Climate activists brought the complaint in 2019, arguing Shell has an obligation to protect people from global warming. But the appeals court at The Hague dismissed the ruling, saying Shell is already on its way to meeting required targets for its own emissions. The court adds it's unclear if demands on the firm to reduce emissions will help fight climate change. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Shares on Wall Street drifted lower Tuesday as the momentum following Trump's election win cooled. All three major indices gave back some of their gains. The Dow Jones Industrial Average lost 0.9%. The S&P 500 shed 0.3%, while the Nasdaq ended flat with a downward bias, down by 0.1%. Wall Street's declines overnight sets a downbeat backdrop for the markets open today. In any case, trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Now, after declining for the past 5 sessions in a row, we're seeing the market extend its losses slightly. We're trading lower with a slight downward bias. We're down by just 0.1% to 68.05. However, the broader all shares index is going the other way, up slightly. Up by 0.1% to 38.25. Now, analysts say yesterday's declines in particular came on the back of a drop in foreign direct investments, or FDIs, which comes as global investors, particularly those from the U.S. and Europe, have become more cautious in general, which leads them to safer and less volatile markets. Now, taking a look at the sub-indices in the market, the financials counter is down by 0.1%, industrial counter up by 0.1%, holding firms slightly lower, services as well, mining and oil counter up, and the property counter is down slightly. So not much movement in the market today. Now, at the foreign exchange market, the peso opened at 58.75, strengthening slightly from its previous close of 58.83. Now, Bitcoin hits a historic high, surging past $80,000 following Trump's election win. Now, this comes as Republicans are on the brink of full control in Washington, with a GOP-led Congress poised to advance Trump's bold agenda, including his ambition to make the United States the crypto capital of the planet. Bitcoin has already soared more than 80% this year, and Trump's promise to create a strategic national Bitcoin reserve has only amplified the buzz. While Trump's bullishness on digital assets has electrified markets, questions remain, is his confidence rooted in realistic growth prospects, or could it signal a risky overcommitment to a volatile sector? Now, we are supposed to have the CEO of CoinsPH with us, but due to some technical difficulties, we will have to reschedule that interview. In the meantime, we have on the phone with us Luis Limningan, the head of sales from Regina Capital Corporation. We'll take a shift and we'll go back to the PSE index and talk about that. Hi, Luis. Good morning, and thanks for being with us, especially on short notice.
No problem, Maiki. Thank you for having me for this morning session.
It's always good to have you, Luis. In any case, Republicans are nearing full control of Congress, having secured both the Senate and the presidency. With a clean sweep, Trump's administration is expected to push forward with its U.S.-centric agenda. What do you think this is going to mean for capital fund flows, especially to emerging markets like the Philippines?
Well, I don't know what exactly is going to be priority, whether it's going to be on economic front or geopolitical front. No, he made a lot of promises during the campaign. No, so I'm not sure in particular what the order at which he wants to have this expedited. Well, he said he wanted to impose 10 to 20% across the board tariff, with particular focus on China, which would be 60%. So I'm not sure also how his supporting party is going to be. They also feel as strongly as him, and how fast they want to do this. Because again, there's going to be a ripple effect. We don't know also if the other economies are going to retaliate and impose tariffs as well. So that one, I think, it's very difficult. But I think the funds we've been noticing, they're erring on the side of caution, and I think that's why they've been pulling out, not just in the Philippines, but also the rest of Asia.
That's right. It's not just happening in the Philippines, it's across the region. Now, Luis, there's always a gap between campaign promises and what really happens. Now, going back to the PSE index in particular, we are at 68.05. Do you think that we could fall even lower over the near term?
Well, you can already see that we've been breaking crucial supports. Everyone was watching the 7,000 being pierced last week, no? And then for those who are following the technical indicators, if you're a trader, I think we've already broken past the 100-day moving average. And now the 200-day moving average support, which is at just below 6.7, we're already approaching that. On the other hand, we're already on the oversold territory. So is this already the bottom? Everyone is asking, right? But that's if you're a trader. But fundamentally, if you're a foreign fund and you are looking to exit in a position, normally the window is 5 trading days or a week. So if I'm a foreign fund and let's say I have a position I'm trying to exit, it usually is being done over a week. And that's why I think even if the prices are very attractive, the locals are just vigilant at this point to see whether they've already completed their selling, and that's when they want to come in.
Okay. Now, can you help us revisit what actually happened? Just a few weeks ago, we were in bull market territory and the market was rallying. Right now, we're close to crucial supports, and everyone's asking, is this actually the bottom? Can you walk us through what happened in the last couple of weeks to bring us to the levels where we are now at 6,800?
Well, we did hit 7,600 last month, no? And I think we were already in overbought territory. And it just coincided because we're in overbought territory, there was an opportunity for funds to take profit, especially ahead of the election, GDP, and earnings results. And I think the corporate earnings generally were in line, and some were actually above expectations, and that's why we saw that there was some consolidation as they were starting to trickle in. However, I think with the election, of course, it was a 50-50 outcome, no, because I think the polls showed that it was almost at a virtual tie. But I think now that now that a lot of the funds who didn't bet against Trump, now they're already trying to realize the implications, and that's why we saw that there was some selling and some profit, and maybe because I think they want to prioritize investing in the U.S. The second thing is the following day is that GDP came out, and it was below expectations, no. But I think we believe it was a bit overdone because we thought that the reasons for the low performance in the GDP numbers in the third quarter was mainly the result of the construction being halted, because I think there were a lot of typhoons, which hampered this, and not just with the construction, but also with the agricultural output. So that's what has led us to today. We're already trading at just below 6,800.
Luis, as investors prioritize investing in the United States, optimistically and realistically, how do you think the PSE index will finish the year?
It's very difficult, and I think it's a moving target at this point. What we are looking for is a catalyst right now that probably stop all this selling. I think probably for November, hopefully we're going to bottom out this month, and then there's some consolidation. I would hope that usually end of the month, that's when funds already as early as now will start to look into 2025. So probably they're going to be sector specific. So they're going to be repositioning as early as end of November to beginning of December. So I hope there is a bit of a relief rally by then. Of course, as I mentioned earlier, we're already in oversold territory. A lot of the corporate earnings that came out were either in line or above expectation. So I hope they realize that and they see that there's some buying opportunity to prompt a rally towards the end of the year.
Given that we're in oversold territory near the bottom, for investors that want to come in, what stocks do you recommend that they pick up?
Well, okay. If you are on the risk-off mode, I think probably buy into the the investment pieces next year, which is probably midterm elections. So there probably is going to be a lot of spending. Those probably that are going to be beneficiaries of this are with the consumer space, probably telcos, right? So those are probably going to be the obvious ones. Even media, of course, because of the advertising. But if you're very defensive, usually the ones that are most resilient are with banking and maybe to an extent power because they pay very attractive dividends. So that's what usually I would advise clients right now. No, we're still navigating because all of these were sudden, all the data that came out and all the changes to our assumptions just came out last week. So we're still navigating the territory.
All right. Thank you for your time this morning, Luis Limlingan, the head of sales from Regina Capital Development Corporation. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionaire News Channel, always on top.